Folks, if you want to make passive income in real estate, you need to watch to the end of this video, because today we're talking about turnkey real estate. And folks, if the New York Times is talking about turnkey real estate, you need to listen to this video and understand why turnkey real estate matters to you, and is it actually a good source of passive income for you? Now, I know turnkey real estate has been something a lot of people have been asking me about, and I hate to make it seem like I've kind of been dragging my feet on it. I promise I'm not lazy, even though I make my 3-year-old get the newspaper and bring it because it's too cold for me to go out in the morning. No, we actually ended up speaking with Clayton Morris, so we're going to be going into detail about exactly what's going on, what Clayton Morris's opinion is that was not exposed or revealed in the actual New York Times article, and then we're going to talk about my opinion about turnkey real estate. Let's do it. So what's the scoop? What are turnkey properties? What is turnkey real estate? And is it something that you should consider when you're thinking about investing in real estate? Well, I'm a real estate broker. I've been doing this for 10 years, and I understand almost all of the principles of turnkey real estate because I've done it all myself. So let's try to analyze this as objectively as possible. Most importantly, let's just start with what the heck are turnkey properties and what are turnkey companies? Well, let's start there. So here's the scoop. There are two main types of turnkey real estate. Let's just define this as simply as possible. One type of turnkey real estate is basically a house that you can buy, and somebody will place a tenant for you, and you'll just start receiving cash flow. The point is, you take a bunch of money, you give it to a company, and then you end up owning a piece of real estate. They place a tenant for you and they manage it for you, which sounds really good. I mean, you basically wash your hands of all the headaches. You don't have to find the deal. You don't have to manage the tenants. You don't have to place the tenants, find them and screen the tenants. You didn't have to renovate the property, obviously not in that order, but you didn't really have to do anything. It was all taken care of for you. That's why they call it turnkey, because turnkey is really a reference to, I actually have a key right here, and I don't know why it's so important for me to do this, but I'm going to do it anyway. Taking a key and just opening the door and everything's done for you. That's basically why they call it turnkey real estate. Everything is done for you. Now, that's one type of turnkey real estate. There is a second type of turnkey real estate. The second type of turnkey real estate is where a company will not sell you a fixed-up house. Instead, they'll sell you a fixer-upper, then they'll agree to fix the property up, then they'll place a tenant, and then you'll get your cash flow as they manage the tenants and the property for you. So all of these sound great because it takes a lot of the headaches of real estate out. You don't have to deal with so much anymore because somebody else is doing it for you. You've now delegated much of the work to somebody else. So now what we're going to do is we're going to talk about the pros and cons of turnkey real estate. Right now we've got the car on autopilot and we're going to head over to check out two properties. One property is basically a property that needs to be fixed up, and another one is a property that I helped renovate and it's basically tenant ready. But I'm going to show you some of the pitfalls that I think will really give you a lot more clarity for investing in real estate, what you would want if you were an owner of real estate, and then what actually creates value in real estate. So let's head over to those properties and check them out. So I'm going to show you two houses. This is one of those houses, and these houses have quite a few differences, but actually not many in terms of what a turnkey company would do. That is, when we look at this particular house, we're going to see a lot of basic things that a turnkey company is going to take care of, like damaged stucco, damaged paint, and some basic cosmetics. I particularly like a house like this because you can see some of the damage without actually having to wonder, well, what did somebody else do to it to sort of maybe cover up some of the damage. I could see that these are the original windows. I could see the stucco is damaged. I could see the extent of termite damage or the extent of damage to a garage door. I mean, this particular garage door even happens to have a mouse hole ready for you right there. As much as I like remodeled properties, I hate to say it, but I kind of like doing some things myself. If something like an electrical panel is going to get replaced and cleaned up, I'd like to know the guy that did it. And sometimes one of the downsides of buying turnkey real estate, that is real estate that has already been fixed up, is you don't necessarily get all of the warranties transferred over to you when you're buying. So you get that new electrical panel, but then you buy the deal as is, and you know the turnkey company's in-house electrician or whatever, referral electrician did the work. Well, now the house is sold to you as is. Let's talk a little bit about what the as is clause means to you. So downside number one of turnkey real estate is if you buy a house that's already fixed up, you usually enter into some kind of sale contract that says this sale is as is, which sometimes separates you from all of the warranties of prior contractors. That means if your turnkey company sells you a property that's already been renovated and you weren't involved in the renovation, and this heater goes out in a year or two after it was installed, you might not have access to that contractor's warranty anymore to come fix the work because maybe you don't know who it is. Maybe the turnkey company just helped sort of mediate the sale of a fixed up place to you. So sometimes already fixed up properties aren't that great. And we'll go to another property that has already had some work to it, and we'll look at some issues there. But as you can see, this particular property, it still needs some work. One of the reasons I prefer this kind of real estate, which also happens to be the kind of real estate that Clayton Morris was selling to clients, is that you get to be involved, or at least get to understand exactly the process of the entire renovation process. For example, if I came to you and said, you know what, you should buy this as a turnkey investment, here's what we're gonna do. We're gonna polish up this tub so it looks like new again. We're gonna place these diverter valves and the overflow and the sink drain and the shower head. We're gonna clean up and polish all this tile and grout. We'll put some new linoleum down. We'll paint the bathroom. We'll paint the cabinets, some new hardware here, new countertop, new sink here. So we're not really fully redoing the bathroom, or we're kind of freshening it up, making it look new. Well, then at least you know that me as a turnkey provider had all of the contacts to all of the vendors who did all of these different things. So if there's a problem, now you know, well, I didn't replace all the plumbing in the house, but you knew that. You already knew I didn't replumb the house. You knew that, oh yeah, because I told you, you know what? These pipes down here, they're still the original galvanized pipes. That is, we might have to replace them to copper in the future. If you buy a house that's already been cleaned up, and you didn't inspect that because you thought, well, it was a move-in ready property, well, then you're open to some possible surprises. So one of the big downsides of turnkey real estate is there's this incentive to really sell you property that's move-in ready, that looks cosmetically updated. That is, maybe you've got new carpet, maybe you've scraped the ceiling, maybe you've painted the walls, but you weren't a part of that. You didn't finance that, so nobody had an obligation to give you warranties or give you what the heck happened to the property. So you kind of just inherit what looks like a clean property, but might still have some underlying issues. See, let me put it in a very basic element here. When I look at a property that needs work, or if a turnkey company comes to me and says, Kevin, here's a property, it needs some work. You know what, the entire roof needs a little bit of love. Well, then I know, okay, I've got an old roof. If I don't replace the roof while I'm working on it, then I know I still got an old roof. But the problem is, with most turnkey companies, they might come in and epoxy this garage, they might drywall the walls of the garage to make it look beautiful. But because you're investing oftentimes from a different location, you're investing from California into Indianapolis or a different area far away, you're not necessarily as attuned to the property's condition as you should be. And when you see beautiful pictures, staged homes, properties that are already rented, already cash flowing, you're not aware of the fact that this ridge cap, just by me standing here looking at it, and I'm not a professional roofer by any means, I know this thing leaks like a sieve. Yeah, you know, usually a hole in your roof could lead to some leaking. You see? Here. When you can see light into the garage, it's probably a bad day. Yeah, I do this every day, I swear. So we know that on one hand, you have turnkey real estate that's already done, but then because you're not part of the renovation project, you might get hit with a lot of unexpected junk. Then you have turnkey real estate where maybe you'll be part of the renovation, or you'll even put up the money for the renovation. But the problem with that is you oftentimes have to rely on somebody that can coordinate quality contractors. And I'll tell you, I used to be a licensed contractor. The last thing that is easy to do in this consumerist world that we have is find quality contractors. I hate to say it, I'm not bagging on the construction industry. I used to be the construction industry of my area. But the bottom line is, having quality work done takes oftentimes more money than people are willing to pay. And so another downside with turnkey real estate is there's a motivation for property managers or people that are running the turnkey businesses to just find the cheapest person to get the work done so that you could start collecting your rent and they could start collecting their fee. There is a downside in that with being involved in real estate that needs to be renovated. So what's the best kind of turnkey real estate to find? Well, really the best kind would be the kind of house that's fully renovated by a licensed contractor. You get all the transferable warranties, or it's brand new construction and you have the builder warranties. Let's go to this other house and let me show you exactly why, and then we'll get into some more about Clayton Morris. I'm gonna go put this hoe back now. This is why, folks, I have a rule in real estate investing that you should always invest within 30 minutes of wherever you live. If you want some more of my rules for real estate investing, understand that I have a real estate investing course that teaches you everything that I know about real estate investing. And even if there's something not in there, whether it's on wholesaling, property management, how to buy wedge deals of real estate, like good real estate deals, I'll answer your questions for you in our private chat group or on our private live streams 4 times a week if you're in the investing course and the agent course. Don't get confused. Yes, there is a course for real estate agents, and then there is a course for investors. You could be a beginner investor, an experienced investor, doesn't matter. You'll learn a ton. Make sure to use spring 2019 and you'll get 18% off the price. But really, folks, the problem with real estate, and this is why there's so many good deals to be had in real estate. This is why I always talk about buying great opportunities and showing you that I'm actually closing deals on great opportunities or helping people buy great opportunities, is because it's hard to do from a distance. And when something's hard to do from a distance, what happens? There's less competition. And when there's less competition, what does it mean? There's more money for you to be made. And that's why I think investing in real estate is one of the best asset classes you could be in. But let's talk a little bit more about turnkey real estate. Let's go look at this other example and let me show you a little bit of a more fixed up property, then show you what's not fixed up. Let's go. So I'm at the second property right now, and I wanted to show you some things here that cosmetically look really nice, but then, you know, when you look closer, you start realizing, oh, wait a minute, it's not renovated. So let's look at the property. Now, when we look around, it's freshly painted, the ceilings have been scraped, but the doors, windows, everything's single paned original. We still have kind of the original wall heaters. So yeah, I mean, this kitchen, for example, still has the Formica countertops. I'm gonna show you some before pictures here of what this kitchen looked like. Then we'll look at some of the bathrooms and do some before and afters. And the thing to note is that we did some very, very basic updates to this property just to make it look more appealing for a sale. We're not a turnkey company. We're not managing this property. We're not hiding the disclosed condition of the property or whatever. We're disclosing everything. Buyers are doing their inspections and things like that once this property sells. But all we did is a very basic cosmetic facelift. Painted cabinets, appliances, painted the property, newer light fixtures, newer carpet, newer ceiling fans, you know, little things like new hardware in here to get rid of that basic kind of brass that you usually have, new little basic quick set room knobs, just to kind of clean up what are the original doors, new smoke detectors, fire alarms, basic things to make the property more appealing and presentable. And so one of the problems that can happen with pre-done and pre-renovated turnkey properties is you could possibly get into a kind of property without realizing what else does the property still need for updating. Plumbing, roof work, electrical. What other things do you not know of when you're getting into a turnkey property? So the mystery of the pictures look great, it's already rented. We could put a tenant in here and call this a turnkey renovation, but I know it's not because we didn't do the plumbing, we didn't do systems, we didn't do those longevity items. We did things to make it look presentable, subject to a buyer's inspection. And that's straight up full disclosure. But again, we're not operating a turnkey company. So now let's get into the Clayton Morris aspect. Let's figure out what happened there, because now I think we've thoroughly not only explained turnkey properties, that is, you could place money into something that's already fixed up, or you could place money into something that needs to be fixed up, and then you get a rental property, usually from a distance. Bad idea to invest from a distance, but whatever. Let's talk about Clayton Morris's program and what happened, the lawsuits, and the New York Times article. Let's go. All right. So by this point in the video, you should have a pretty good understanding as to what turnkey real estate is. You should understand that there's turnkey real estate that you can place money into, and then that company gives you basically a remodeled property and manages it for you, or they give you a fixer-upper and they manage that for you, start to finish. And we've talked about some of the pros and cons of these things, so you should be pretty well versed in the background of turnkey real estate. But what does that have to do with Clayton Morris over at Morris Invest? And as the New York Times puts it, a former Fox News host from Fox and Friends.
I've decided after 18 years in broadcast television, I didn't think I was going to do this. That today will be my last day. I'm serious, I'm very, very nervous. So if I pass out, just keep going. Fox and Friends begins right now. 4 hours of fun this morning. Welcome back on this great weekend.
Well, folks, I had a phone call with Mr. Morris and got his point of view on exactly what is going on. And along with that, we're gonna put in my spin as far as what I believe is going on, because, well, I'm a real estate broker and I've been doing this for 10 years, and I've got a pretty good idea as to exactly where things went wrong here. But let's get into some detail here. Now, the New York Times states that Mr. Morris had visions of connecting mom and pop investors with turnkey investments in Detroit, Minneapolis, and Jacksonville. And that is pretty typical of turnkey companies. Turnkey companies are typically going to try to park your money in areas that have maybe higher returns and less appreciation. If you're part of the real estate investing course, you already know that cash-on-cash returns and appreciation are just opposite pieces of the yin and yang of returns on your money in real estate investing. But this New York Times issue isn't about cash-on-cash returns. No, it's about nearly 24 people suing Morris Invest for, well, essentially claims of nearly fraud. Here's some quotes from people interviewed by the New York Times, where people were quoted saying that properties were in worse shape than advertised, and that rehab work done for properties up front was done poorly or not at all. And you might think that that's an investor's worst nightmare, but then we have Brian Freeman here, a California attorney who plunked down $40,000 for a ramshackled home that was in such bad shape he was issued fines. That goes on to other properties where all of a sudden people were getting fined for properties that had been partially burned down, and they only found out that these properties had been partially burned down through fines they were getting assessed from the city, not from the company that was supposed to manage the property or Morris Invest. Obviously, these photos and these stories of these lawsuits and people losing money, or video clips online of people's attorneys talking about Morris Invest, do not paint a very good picture of what's going on here. But we want to peel the layer a bit deeper and try to figure out why did this happen, and how could you prevent this from happening?
I mean, it's definitely more than just an average guy that's selling homes. You know, he quit. He seemed like he had quite a passion for rental real estate, so enough to quit a Fox job.
And that's when I decided I needed to talk to Mr. Morris himself. So what did I do? I left a comment on his YouTube channel and said, hey, Mr. Morris, hit me up via text on my personal cell so we can chat about what is going on here. And on March 30th, that is exactly what we did. Clayton Morris and I had a phone conversation, and I took notes, no recordings or anything, just notes on the conversation that we had. And in that conversation, Mr. Morris was very open about what had happened. And the very first thing that got me thinking, aha, I have a little bit of a better picture of what's going on here, was when Mr. Morris said, quote, he had a relationship he believed in, end quote, with a company that, quote, managed my personal properties as well, end quote. Folks, this to me was a little bit of the first, whoa, wait a minute. And for you to understand why I had a whoa, wait a minute reaction, you have to understand a little bit about how the real estate industry works. You can collect a referral fee and not tell anybody that you got the referral fee. In most places, you have to tell people that, hey, I might be getting some money by having you click on my Amazon affiliate links, or you know what, if you buy the real estate investing course, you're paying me. Well, real estate referrals are different. In fact, real estate referrals are so different that here's exactly how a typical real estate referral works. You come to me, and let's say your name is Freddie Mercury, and you say, you know what, Kevin, I'm looking to buy a house in Texas for $500,000, and I love you, Kevin. I want you to find me an agent in Texas. And I go, no problem. I'll get you an agent in Texas. I go to the most honorable resource on the internet, google.com, and there's a real estate agent. Hey, real estate agent, I got a client that I want to send you. He's going to be buying a place for $500,000. He's already pre-approved. Would you be open to representing him? And then when he closes the deal with you, kick me back a 30% referral fee. Now keep in mind, if the commission to that buyer's agent is 3% and I get a 30% referral fee, I could stand to make $4,500 simply from having made that phone call and said, you know what, if you agree to give me 30%, I'll send you a client. Then I turn around and go, hey, Freddie, I got you a great agent in Texas. Call this agent. I already let him know that you would call. That's it. I don't have to tell Mr. Freddie that I'm about to pocket $4,500. That is the legal nature of referrals in real estate. And I mean, I'm not an attorney, so knock on wood that I still have it correct. I'm just a real estate broker here. So back to Mr. Morris. Mr. Morris established an excellent company that markets itself very well to be able to find people who were interested in investing in real estate. Most of these people tend to be out of the area. This is why you see California investors dumping money into what appear to be high cash flow areas like Indianapolis or Jacksonville or Detroit. And folks, this is where I think everything went wrong. In fact, the New York Times on the cover of the business edition, because I get the New York Times delivered to my house, literally says right here, he got referral fees, clients got money pits. Now, I think that's obviously a little clickbaity, but I don't want to water down the people's issues where people were hurt here. But here's the straight scoop. Most people believed that Mr. Morris was going to see the projects from acquisition, that is purchasing the deals, to fix up if they needed fix up, to tenant placement, and then management from A to Z. Well, my conversation with Mr. Morris revealed, and I'm sure he said this in other places, that he actually has a contract with various different property management companies in other locations. This contract says, quote, they're responsible for renovation, construction, and management. We are just a referral for them. He further states, quote, we really trusted them. And at this point, them becomes the target of the New York Times article. And while they didn't get their face plastered on the front page of the article, which maybe they should have shared some space on the front page here, Ocean Point was apparently the referral contractor where a lot of these lawsuits are stemming from. Now, I'm not suggesting that all of the lawsuits are solely due to Ocean Point's fault, and I'm not trying to say that Mr. Morris is not at fault. I'm not trying to take sides at all here. I simply see that Mr. Morris, from my point of view, is taking advantage of a referral system that does legally exist, but if now this referral is passed off to a property management company, and the property management company, which if you watched the part of the video earlier where we talked about how hard it is to find property managers and contractors and good agents locally, especially when you're not there, then we know this is kind of like a tinderbox for problems, aka tiny little match gets lit and everything So let me just clarify this really quickly. Mr. Morris probably didn't make it super clear to his clients, and I'm just assuming here, that the nature of this entire relationship was just one of a referral relationship. That is, Mr. Morris would take your information and then give it to a property management company. They would go buy the deal, they would go fix up the property, and if they messed up, it was their problem. That's probably why Mr. Morris is getting sued. Should have probably been a bit more transparent that no, it is not him that's doing the coordination, it's actually this property management company. Well, unfortunately, if your consumer doesn't know that, you end up getting sued. So, that sucks. Now, maybe Mr. Morris will be able to wash his hands of this because of the contracts he has with these third-party real estate management companies, because he does say, quote, "We know the truth, so we're good." And he believes that 90% of the New York Times article should have focused on Ocean Point, not him. Now, obviously, we know that there are three sides to every story. There's the client's story, there's Mr. Morris's story, and then there's the truth. Now, I'm not saying that anybody is lying or anybody's wrong. In fact, the real point of this video is to tell you something that I've been telling you for a very long time. You should invest in real estate locally. In fact, one of the things that also came up in my conversation with Mr. Morris was that Mr. Morris would go to visit these project sites, which, keep in mind, he has projects throughout the entire United States, has completed apparently thousands of projects and collected maybe upwards of $5 to $6 million in real estate referral fees, at least according to the New York Times article. And folks, I mean, maybe he's got an excellent business model and this is just a basket of bad apples. But the bottom line for you as a consumer is, if you're not there local, you don't know what's going on. Now, I did have a suggestion for Mr. Morris. I suggested, hey, well, Mr. Morris, why don't you have like a Ring camera on the front door or maybe one in the kitchen, just so the client could log in and see who's at the property, when are they at the property, are renovations going on, is the house being squatted in, are things progressing as planned? And he actually thought this was an excellent recommendation for the property managers to essentially pick up and start using in their properties. It's certainly one that I'm encouraging my sellers to pay for because I think it's a great idea, especially on vacant real estate. But to me, nothing replaces the argument that if you're not investing locally, you don't really know what's going on. And unfortunately, I think Mr. Morris was a victim of not being local. So the big lesson is, had Mr. Morris been local in Indianapolis for all of these projects, he would have probably been able to identify these problems. And I don't believe that Mr. Morris is a bad person. I do believe, though, he took a lot of referral fees and referred a lot of people to different companies, and then once they were referred, trusted that the other companies would do the work without verifying that they were doing the work. And that's where Mr. Morris gives us an excellent quote. When I asked him what he would do differently now going forward, because he is still in business, he stated, "Kevin, trust but verify." And folks, this is an age-old political adage, and I think Mr. Morris just said it best for us. Trust but verify, because when you're not there locally, it makes it very difficult to verify. Now, let me give you a slightly different perspective here, just to make this very simple and clear. Yesterday, I was talking to an employee of mine who was talking about investing in Idaho, and I mentioned, hey, would you ever invest in this part of Idaho? And his reaction was a very quick, oh, heck no, I won't invest in that area. And that made me laugh because I thought to myself, say no more, I get it. Because here's the thing, when you grow up in a city, when you go to school in an area, when you go to college in an area, you go to a bank, you go to a gym, always in the radius of 30 minutes of wherever you live, guess what? You start learning which streets not to go on. And when you start knowing which streets not to drive down or walk around on, guess what? You know which streets not to invest in. But when you are investing across the country like turnkey companies encourage you to do, what have you just lost? Well, folks, I've said that time and time again now, and hopefully you can internalize that lesson when you're thinking about turnkey real estate as your big takeaway. You're thinking about passive income, you're thinking about cash flow. Honestly, look no further than your backyard. Understand the internal rates of return of combining appreciation and cap rate, as in cash flow or cash on cash returns, is exactly the model that I teach you in my real estate investing course, which you can find with a link below. And remember to use coupon code SPRING2019 for 18% off. Now, regarding my conversation with Mr. Morris, very, very good conversation. We ended that call by realizing that 2019 will probably end up being the toughest year of Mr. Morris's life. But there was one quote that he left me with that I thought was especially powerful. Here it is. At the end of the call, he mentioned that when he gets on stage in front of 2,000 people, there are, quote,
2,000 opinions of me in the room. Not one of them is true. I can focus on the 1,000 people that love me or on that one troll." End quote. And ultimately, he suggested if we stay true to ourselves, we have nothing to worry about. Thanks for watching.